When I look at the chart pattern of SUI, it is a wedge pattern. Again, we're way up here. We're just short-term consolidating now. My guess goes to all-time highs pretty soon. Because of the energy and what's going on here, we happen to be the fastest horse right now. Is that a guarantee? No, it's not. But I just follow the money. I follow the liquidity flows. I follow the charts. I try and make the best asset allocation decisions I can. And the best one I can think of is we're in the banana zone. So the banana zone comes in phases. I'll show you that in a sec. But basically, in that correction, using a simple measure, RSI, we got to oversold. What normally happens afterwards, period of sideways consolidation, break higher. We've just had the sideways consolidation. This is what happens if you put all of those periods together, create an average. That looks the same as the liquidity chart. It's all the same thing, right? It's all telling you exactly the same thing, which is the banana zone is upon us. That's when the dollar had this massive move. It was a 4 standard deviation move. It was one of the largest, fastest moves in the dollar's history. What happens after that? Well, after the red line, number go up.
Last January, as the cryptocurrency market was reeling, Raoul Pal surprised everyone with a boldly optimistic outlook for Solana and SUI. As the crypto winter dampened enthusiasm, the Real Vision founder, defying cautious narratives, bet on a bright future for these two altcoins. To decipher this unique bet, we must first understand the architecture of these blockchains before delving into the technical and macroeconomic analysis that guided Paul. Solana and SUI cryptocurrencies are emerging as Layer 1 champions. However, their architectures differ radically. Solana combines proof of history and proof of stake. This combination guarantees very high throughput and almost token costs. So DeFi and NFTs are thriving there. However, repeated outages highlight its limitations, which explains the density of its ecosystem. Yet the shadow of network-wide outages still lingers. This choice makes SUI an ideal choice for video games and Web3 applications. However, its still nascent ecosystem suffers from a lack of partners and developers, which is an obstacle to widespread adoption. Given these distinctions, the duel promises to be exciting. Solana dominates the scene today. SUI, younger, focuses on innovation. According to Raoul Pal, SUI is about to repeat what Solana did in the last cycle. Before we move forward, if you want to stay updated with the latest crypto events and news, you can subscribe to our channel and like this video. Now let's get back to Raoul Pal's view on Solana and the overall crypto market.
So here I'm using Fed net liquidity. Fed net liquidity is the balance sheet of the Federal Reserve, the Treasury General Account, which is the Treasury themselves, not the Fed, and then the reverse repo facility. These are the levers that they've been using. It started just using the balance sheet, 2009, all the way through to about 2014. It was just the use of the balance sheet. Then they started sneaking in new ways of debasing currency, and that was by adding in these other levers, getting banks to put reserves here or take reserves out there, or injecting money into the economy via the checking account, the Treasury General Account. That's actually shifted to total liquidity now because everyone figures out the game, which is the debasement of currency, debase the currency, try and grow GDP growth and lower debt to GDP, or just manage it.
SUI is attracting a lot of interest as a competitor to Solana. Paul has publicly stated that he prefers SUI over Solana, calling the asset the favorite. Paul noted that if he had to choose one, he would prefer SUI over Solana. Along with this statement, he shared a comparative chart of SUI and Solana's performance against the US dollar, highlighting that SUI appears poised to break through a key resistance level. Paul isn't the only one excited about SUI. Prominent digital asset trader Michael van de Poppe also expressed optimism about it. He highlighted that SUI's adoption as a decentralized financial network, especially Bitcoin-centric DeFi, is growing rapidly. Van de Poppe said that when the market resumes an uptrend, capital will flow into assets that have demonstrated strength. SUI is one of these assets. He also highlighted that Bitcoin DeFi is experiencing impressive growth and that currently 10% of the total value locked TVL is channeling through SUI. Adding to the optimism surrounding SUI, asset management firm Van Eck predicts its value will increase by more than 358% from its current levels. Van Eck said the digital asset bull market is expected to continue throughout 2025, with the first peak likely occurring in the first quarter. These developments suggest that SUI is quickly cementing its position as a formidable competitor in the digital asset sector, capturing the attention of market participants and industry experts. Paul made a bold prediction. The biggest altcoin season in history is just around the corner. Despite recent fluctuations in Bitcoin's price, Paul remains optimistic, drawing parallels with previous cycles where similar corrections preceded explosive growth. Paul estimates a 70% probability that Bitcoin's current correction is over and predicts the cryptocurrency will break from its past price patterns. While Bitcoin remains a key player, Paul notes that altcoins with strong communities could see notable growth. He bases his forecast on key economic indicators such as rising new orders and the ISM index surpassing the 50 mark, a historical sign of an expansion in the cryptocurrency market. Bitcoin's price is hovering around $100,000, frustrating investors who have hoped for a surge. However, much of Bitcoin's performance is tied to investor sentiment regarding the Federal Reserve's monetary policy. Paul describes the next market phase as the banana zone, a period of rapid growth for altcoins. While some expect immediate rebounds, he emphasizes the need for patience as altcoins tend to skyrocket once liquidity is fully established. With just 2 weeks until this liquidity shift materializes, Paul sees it as a crucial moment before altcoins go parabolic. For this part, Miles Dutcher believes altcoins are in a delicate situation. They are not in the midst of altcoin season, but neither are they in a market heavily dominated by Bitcoin. He suggests investors wait until Bitcoin's dominance continues to grow, officially entering Bitcoin season before diving deep into altcoins. The top altcoins to watch vary, but Ethereum, Solana, and Avalanche are strong contenders due to their adoption, community growth, and thriving ecosystem. The U.S. macroeconomic outlook is once again dampening cryptocurrency's bullish momentum. Weak growth and high inflation have raised fears of stagflation, leading to declines in stocks and cryptocurrencies. Meanwhile, prediction markets Kalshi and Polymarket anticipate a high probability of recession by 2025. It's 74% and 70% respectively. Despite the weakness in altcoins, experts are encouraging sidelined investors to buy into dips, citing strong global liquidity. However, savvy investors are not panicking. Henrik Zeberg, chief macroeconomist at Swissblock, says that cryptocurrencies and stocks are still likely to stage a spectacular rally. He notes that U.S. GDP data has been negatively impacted by large imports by U.S. companies in anticipation of Trump's tariffs and does not accurately reflect the country's growth trajectory. Although the Fed is unlikely to cut its key interest rate at next week's FOMC meeting, Chairman Raoul Pal could strike a dovish tone to calm the market. Rather than overreacting to short-term fluctuations, cryptocurrency investors should exit. Global liquidity, as measured by the global M2 money supply, is currently at an all-time high and is trending upward. Historically, this indicator has shown an extremely strong correlation with Bitcoin's price trajectory. If the trend continues, Bitcoin is headed toward $140,000, which would likely pave the way for new all-time highs for altcoins.